Hey everybody, Boris. Welcome to the crosses section for weekly technicals for January 16th through January 20th, 2017. And I think the interesting story again this week is the fact that the primary driver of trade is going to be in the majors. The crosses have some unique, interesting, but I think sort of low volatility, slower possible trades away from the maddening action in some what I found to be kind of unique and unusual places. One of the first things that struck me this week was the hidden underlying strength in the Kiwi Swiss, which is not a pair that a lot of people trade, but is a very, very decent carry trade pair. And that, again, I think plays into the whole idea of carry coming back to calm dollars. I like it both ways. I like the fact that even if the dollar strength sort of accelerates this week, the offset in the Swiss should really protect the Kiwi Swiss from a major correction to the downside. On the other hand, any kind of a dollar correction or a push higher in the Kiwi should help you. In the meantime, you collect carry. I actually like it as a much longer term trade. I'll show you on the charts how it goes. Let me get through the other ideas here. Let me show you some of the resistance and the support points that I think are worth watching. So Kiwi Swiss, to me, sort of a 71 support, 73 resistance. We'll see on the charts why I like it as a very interesting long-term possible trade for a couple of weeks, really, as a positive carry trade. The story in pound yen is interesting, I think, or sort of the pound yen euro pound story is interesting from both angles. So the negative pound story very, very clearly expressed in the pound yen. If you are bearish cable, this is probably the best pair to trade it, simply because it's very close to a key support level. A break there, 38.50, really takes us sharply lower, and the overall structure of the trade just bears very heavily negative on it. On a failure of continuously lower highs. So the 41 is the resistance there. On the flip side, any kind of pound strength finds really very decent technical resistance at this 88 level. So I actually think the pound can be traded probably maybe both ways, in the sense that it gets weakness at the front of the week with maybe more turbulence against Theresa May, and then stabilization and possibly a rally into the end of the week because we have positive data and maybe potentially a surprise from UK Supreme Court. So sort of a short pound yen front of the week and then a short euro pound end of the week could be a really interesting 1-2 punch as you look at the cross trades. Let's take a look at the charts here and I'll show you exactly what I mean. So let's first let me take you to Kiwi Swiss, because that's sort of an interesting side story that few people have been following. So this is the reason why I like Kiwi Swiss. If you look at it on a longer term basis, obviously a very, very good buy the dip carry trade pair, because anytime you're sort of buying the lows here, it's been a series of higher lows, so a modest but very definitive clear uptrend. We've made the fresh lows here at 70.50. We're about 100 points above those lows, and there's scope here all the way up towards the 73s. On a longer term basis. This is a very, very slow, very kind of a choppy moving trade. And any kind of a dip here towards the 71.50, 7100 probably presents a pretty decent opportunity. Of course, a break of the 7000 negates a lot of the upside potential. But the trade is very carry positive. It's one of the most carry positive trades in the market because Swiss have negative rates, and of course Kiwi has the highest rates in the advanced industrialized world. It looks good on the near-term basis, where they bought the dip here right around the 71.50, and a break above the 72s here really puts us in play towards a much stronger and higher push towards the 73s on a longer-term basis. This is a very quiet long-term trade, but while you hold on to it, you're carry positive, so it can't be all bad. Pound yen, here's the weakness in the pound that I was talking about. So yes, you have this sort of very key support at 38.50, but if that goes either off the yen sell-off and just simply a quiet in the pound, which could be very likely, or just a more turbulence in the pound, really presents a very nice sharp move here all the way down to the potential support of 38.50, sort of 100 points to the downside. With a stop somewhere, I would say around the 141s. If you're above 141, clearly this was the bottom made, and you were wrong on the short. So front of the week, this to me looks like a very interesting potential trade if you're negative pounds. The end of the week, if you look for a pound reversal, this is the cross, of course, that looks interesting, because here technically we're looking at exhaustion. The euro seems to be coming up against pretty decent exhaustion at this 87.50, 88 level, and a move back up here on further pound weakness could find a pretty decent resistance at the 88, which then could take us right back towards the 87, 86 on any kind of pound strength. So the crosses can, in many ways, could be traded both ways as an expression of near-term pound weakness and near-term pound weakness, and then maybe later the week pound strength. If we start to see euro pound come down even sharper, at the beginning of the week, then that would suggest that the pound strength is actually more significant, and it's certainly going to be worth watching. A break here around the 86.50 to the downside really puts us on a much further scope to the downside, all the way out to the 85, because that would suggest we would have made a double top here right in front of the 87.50s. So very interesting, a lot of hesitancy, but also a lot of possible opportunity here in the crosses. And I wish you guys the best of luck, the best of trading. I'll talk to you next week. Boris, over and out.